Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. President Trump questions Jerome Powell's decision-making on interest rates and says he plans to speak with the Fed chair. Governor Kazuo Ueda says the BOJ will continue to hike interest rates if its economic outlook is realised. This after the central bank raised rates to 0.5%, the highest level in 17 years. Plus, Montpaschi launches a €13 billion all-share offer for larger rival Mediobanca as Italy's banking consolidation heats up.
In the meantime, a quick check on these markets. Green on the screen when you look at the futures picture. A little bit of catch-up coming, of course, a record high for the S&P 500 in the U.S. session. Eurostoxx 50 futures trying to get in on that party, higher by 0.4%. The FTSE 100, not so much. We're going to dive into the details there. Of course, the currency picture in Asia very much in focus with the BOJ, as Anna was mentioning. And, of course, the China read-through from Donald Trump. A 155 handle on dollar yen, 725 on dollar yuan. The countdown to the opening trade starts right now.
You said that you would demand that the interest rates come down.
Well, I would
Do you expect the
put in a strong statement.
Do you expect the Fed to listen to you?
Yeah.
Are you going to talk to Powell about this and bringing the rates down?
At the right time, I would.
Friday morning, more Trump talk. Does it turn into action? Maybe picking a fight with the Fed. Press conference next week is going to be fun for Jay Powell, isn't it? I suspect he's going to be asked an awful lot about whether or not he will listen to the President of the United States. But as we wrap up this week, there has been a lot of talk. There has been some action. Let's not ignore that. There's definitely been action. There's plenty of executive orders that have been signed by Donald Trump. But, Kriti, we haven't had the tariffs. The reality of the tariffs isn't there. Yes, I may talk to the Fed at some point. I don't really want to raise tariffs on the Chinese. There's been a lot of talk, but actually in reality, some of the things that the market was really frightened about haven't materialized in reality. I
thought it was really interesting. Our colleague David Inglis over in Asia made the point as these headlines were hitting the Bloomberg terminal and these comments were being made that this is actually one reason to actually start buying and selling China, this kind of volatility around the tariff story. Otherwise, the market moves. You're seeing in other sectors. You're seeing it in oil. You're seeing it in the bond market, even a little bit in the stock market, this deregulation story showing up and moving the S&P 500 to those record highs alongside those earnings.
Yeah, really interesting. The shifting narrative. We talked about this yesterday. What would be interesting to hear from Trump, and we heard some of it on China. It does seem as if his thinking is moderating a little bit. He doesn't want to put tariffs on China. It's different to, day one, there'll be 60%. It's not that. It's a much more nuanced conversation, to your point, Guy. We have actually no action yet. And then on Europe, some of the rhetoric around Europe was quite aggressive, very anti the regulatory environment in Europe, anti plenty of other themes that he was anti, and wanting to bring oil down. So we got some greatest hits, and we got a real reminder of the way that many assets have to be on their toes with Donald Trump in the White House.
So you're going to get volatility because you don't know which way ultimately which way it's going to go. Is it just going to be, as John Authers puts it, bark, or is it going to be bite? Does he actually have the ability to control oil prices? There are many questions around that. Will he actually have an impact on the Fed? Even tangentially, will he have an impact on the Fed? I don't know. It's really hard to tell at this point. So really hard to position for it. And in some ways, this is great for traders, terrible for investors.
Yeah, and you mentioned the Fed as well. Central banking very much in focus globally in terms of rate hikes and the BOJ.
Yeah, absolutely. So let's go on to the BOJ, shall we? Because we've got the press conference ongoing. Governor Ueda delivering that press conference. The headline, of course, as expected, the BOJ did hike interest rates. So that was, 8-1 vote, most at the BOJ wanting that to happen. We saw some strength in the yen as a result, but some of that actually came off some of the tariff conversation from Trump, where we saw dollar weakness, of course. So some of that yen strength came even before the Ueda and BOJ decision. But that has been reinforced a little bit by some of the lines that we've heard from Governor Ueda. Certainly, I pulled out a few things that were just at the margin a little bit hawkish, certainly talking about wages. That was one of the lines that stood out to me, saying that they're expecting a solid result from the spring wage talks, and we know that's a real focus for them. And also saying that global markets have been calm after Trump's initial days. And if we remember August last year, when the BOJ unleashed all kinds of that and some US data unleashed all kinds of volatility in global markets. And since then, there's been a nervousness that the BOJ would move if things were not generally calm in markets.
So the markets are relatively calm. I guess that's probably, a fair point. Does the BOJ want the yen to appreciate quickly, though? The yen to appreciate quickly? I wonder. The politicians would love it. But you look at the latest inflation data out of Japan, it's driven by energy, which is priced in dollars. So if you start to see a yen appreciation story, that inflation comes out of the system, which in some ways is what the BOJ wants. It wants some inflation in the system.
Yeah, although
so
some of the
really
inflation forecasts are now ahead of where they want them to be, aren't they?
Yeah, well, I think that's what you mentioned, the energy point, and that's one that we see right here in Europe as well, with natural gas prices potentially driving moves you're seeing in the euro as well, or in terms of that correlation. I thought it was interesting that a lot of those energy subsidies also have to do with that fiscal policy. Japan's also dealing with a budget deficit crisis the way that it is. Many countries around the world are. So there's also one eye on what Prime Minister Shiba can actually get through Japanese parliament. Let's
talk about Italian banking. Love an Italian banking story.
Love a hard pivot.
There seems to be plenty of them around there at the moment. I don't know how you pivot from one to the other. In terms of the deal that we've got announced this morning, we had a great story on this overnight, so we've kind of had some idea that this was coming. Paschi is going to buy Mediobanca. Mediobanca, in theory, is bigger. Paschi shares have come up really strongly. This is an all-share deal, so that makes this possible. Is this a family affair? It's really interesting to see the Caltagironis, the Del Vecchios being so involved in this process of trying to create potentially a third Italian bank. What's the industrial logic for this? The swirl of Italian banking at the moment in terms of what fits together with what. Is that dance over? Are we starting to see some consolidation that might result in actually the formation of that third bank?
There does seem to be some political support for that idea, doesn't there? And the government in Italy still, I methis goes back to the post-financial crisis. Still, we're dealing with news lines that go back to post-GFC. But the government still owns 11% of BNPS. And they've been very vocal about wanting to create a third bank. And that's been something, of course, that we know that UniCredit has come up against when it's made its own offers. I don't know about you, Kriti, but I refuse to talk about Italian banking without suitable graphics.
We will certainly get there.
I drew one. But it's not up to Bloomberg's. It's not up to Bloomberg's TV standards. So.
Well, a lot of arrows.
I won't bother the audience with it.
Well, a lot of arrows. I think that the takeaway here is that in about 40, 50 minutes' time, we might actually see the Italian banks move on the story, because it's not just Mediobanca and Montpaschi. Banco BPM has a stake in Montpaschi. UniCredit's trying to get a stake in Banco BPM. And at the end of the day, the juicy bit of this whole thing is the Generali stake of an insurer. I could nerd out about this all day long, Guy.
We're not done yet. You have plenty of opportunities. The graphic, there's a great graphic. Kriti's got a great graphic. There's a great graphic in the story this morning about who owns what. Anyway, Paschi makes a $13.3 billion all-share offer for Mediobanca. That's a slight premium to the share price the market cap as it closed last night. So let's tell you what we've got coming up on the show. Michael Snade, BNP Paribas Markets 360, head of cross-asset and macro quantitative strategy, is going to be joining us. Maria Vaidmana, State Street Global Markets, head of equity research. Yusuke Nomura, FX strategist, joining us on the BOJ. Actually, the bigger kind of story around what is happening with FX at the moment is fascinating, Kriti.
Yeah, plenty to digest on the show, plenty to digest in the day ahead as well. A lot of it around economic data on both sides of the Atlantic. At 9 a.m. UK time, Euro area PMIs are going to be hitting. Of course, we're going to cover the French and German ones throughout the course of the show. Then 9:30 a.m. UK time, we're going to get those UK PMIs as well. And then the focus shifts to comments out of Davos. This time, ECB President Christine Lagarde will be speaking. 2:45 p.m. UK time. Now, all the focus will be in the U.S. Those U.S. PMIs are going to hit the wire, in addition to UMich sentiment, U.S. existing home sales as well. And then, of course, American Express earnings also will be on the docket.
We are going to be looking for that European data all the way through this programme, aren't we? We've got the French number dropping, then we've got the German number dropping. And in terms of the French number, will they all stay below 50? Because that's the extent of the contraction that we're seeing in the French economy. The German services number has been above 50. Will we see that continue to be the case? But broadly, of course, we're working our way towards an ECB meeting. We're going to hear from Lagarde today. Interesting Bloomberg story out this morning saying that sticky prices are increasingly a concern for economists, for investors here in the Eurozone, not just elsewhere.
It was interesting. Trump was talking about global interest rates coming down, not just US interest rates, global interest rates coming down, which takes you on to whether or not you wonder whether he actually does want a weaker dollar.
Do you think he's going to call Christine Lagarde for a chat as well?
Yeah, maybe. I'm sure she'd listen. I can't remember who it was. I think it was the first ECB governor that talks about, I hear but I don't listen. I can't remember exactly who that quote was from, but I think it's one that Powell is going to have to learn to channel. What else do you need to know this morning? Let's run you through some details. Reliance Group is building what may become the world's biggest data centre in India. The latest move in a blitz of global investments designed to capitalise on booming demand for AI. The company, led, of course, by Mukesh Ambani, is buying NVIDIA chips for the operation in Gujarat. Bloomberg understands it's expected to have a total capacity, get this, of 3 gigawatts, making it far bigger than any data centre currently operating. UK household confidence has fallen to its lowest level since 2023. The latest survey by GfK shows that consumers are becoming more pessimistic about the economy and their own financial prospects, with fewer willing to make big purchases and more adding to savings. The decline in confidence is, of course, a bad omen for the economy that has slowed sharply since Labour won a landslide victory last July. And Burberry announcing positive news in its latest trading update. The UK maker of high-end trench coats reporting a beat on its third quarter comparable sales, expecting that its strong second half results will broadly offset a first half adjusted operating loss. We'll come back to that story a little bit later on. The numbers are definitely better. They're still not great. Right, let's kind of put this all in context. But a -4 minus an expectation of -12 in terms of that Q3 number, way better than expected. But they are talking about this being the early stages of the turnaround.
Yeah, early stages of the turnaround, and it's really interesting to see the lines on China. So there were only a couple of estimates on this number, but in terms of the performance versus those estimates, they've really beat. OK, it's a contraction, to your point, Guy. It's still not strong, but it's much better than was anticipated. So third quarter, mainland China comparable sales down 7%. The estimate was for a drop of 18.5%. So again, we've got another news line that relates to China, along with Trump and his tariff rhetoric, that's a little better at the margin than we'd anticipated.
I will admit, I don't follow Burberry's latest fashion developments in terms of their style as well. I really should, but I don't, for shame. But it's also Paris Fashion Week, and I think we're going to have Andrea Felsta join us later in the program, who, of course, covers it far more closely than I do. I think there's still a focus on whether trying to go mainstream, right, in terms of some of their designs, market to the mass consumer. It's working in China, but is it going to work in the States and Europe?
Do you need to go back to what Burberry has traditionally been good at? And I think that's the question. Go back to the check, go back to the coats, go back to all that kind of stuff. Is that ultimately where this business goes? But what does that deliver in terms of a price point? You're not going to get that premium LVMH, Hermes type rating.
And we've already heard from Richemont, haven't we, this earnings?
Really strong.
That was really strong. And the Richemont share price actually going to a record in yesterday's session. These numbers come ahead of LVMH. So, what this tells us about the rest of the luxury sector is an interesting one for Andrea as well.
So the share price on Burberry is amazing. So high 2641, if you look at a 5-year share price chart, that was on April 2023. The low is 571. So you got an 80% drop from top to bottom, and then an 80% pickup back to where we are now. So some massive volatility in this stock.
There we go. Plenty of volatility on many fronts this morning. Coming up, we will be hearing from Nadia Calvino, who is saying that Europe needs more integration to drive investment in the bloc. We'll bring you that exclusive interview with the president of the European Investment Bank a little bit later in the show. Plus, we'll go live to Davos on the final day, of course, of the World Economic Forum. It's been dominated by President Donald Trump when he wasn't there, and then when he was there, but only virtually. And later we will take a closer look at Boeing's path to recovery and the role of Elon Musk in that. What kind of conflict of interest does he have right now? That is the subject of today's Bloomberg Big Take story. We'll get to that later in the programme. If you want to get involved in any of the conversations we've been having around the desk so far, or any of the guest conversations still to come, please do get in touch. IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
We have one very big power over China, and that's tariffs. And they don't want them, and I'd rather not have to use it. But it's a tremendous power over China.
He spoke 3 times yesterday. That was part of the conversation that he had with Fox News. Let's talk about how markets reacted to all of this, fold it all together. Bloomberg's Valerie Teitel has that job this morning. Val.
Again, another day of hints from Donald Trump that he will be taking a softer than expected stance on these tariffs. That latest comment from his Fox News interview overnight, really taking the markets on the chin. The dollar bulls, I guess, very much getting pummeled this week. The move in CNH is very notable. We are moving 0.4%, nearly 0.5% stronger in the Chinese yuan. And the yuan has actually had one of its best weeks since August. All of that with this steam coming out of the dollar bull trade on speculation that Trump will slap tariffs on quickly. A lot of that being thrown in the trash can right now, Guy, as we reevaluate the path forward. But there's also some interesting stuff going on under the hood in FX, and that is implied volatility across G10 currency pairs is dropping, and it's dropping rapidly, taking a bigger step down than what we saw after the election. And this is paving the way for a risk-on rally. Again, we had that S&P 500 notching another record high last night, surpassing that 61,000 on a level on a closing basis. If this FX volatility continues to decline on this softer than expected stance on tariffs, expect the risk-on rally to go further. But another notable thing, Guy, is those Trump comments when it comes to interest rates. He used some very strong language at the speech to Davos, saying that he demands that interest rates drop immediately. A lot of us giving him a deer in the headlights look after that comment, saying, is he aware that the Fed is about to go on an extended pause? The Fed meets next week, likely to pause their interest rate cutting cycle. Perhaps this is overshadowing that Powell could come under some heat from Donald Trump sooner rather than later.
Well, there's a lot going on here. Some of it works together, some of it's contradictory. How does it all fit together for investors, for traders? Let's talk about that now. Michael Sneyd, head of cross-asset and macro quantitative strategy at BNP Paribas Markets 360, joining us around the table. Is the trade sell the dollar and buy US assets? Because that feels quite contradictory to me.
Good morning. We think that you should buy US assets, but you shouldn't sell the dollar.
Right.
You still want your dollar exposure, and that's because we think that tariffs are coming. It's interesting, we did a survey this week asking our clients their perception of tariffs. Real mixed results. Quarter view that tariffs is just a negotiation tool and that they won't be coming. A quarter expect that tariffs are going to be delivered quickly. Our view is in the middle. We think tariffs are going to be coming, but they're going to be coming gradually.
So as an investor, what do I do with that? Because that's in some ways contradictory to some of his other stated aims, which he'd like a weaker dollar, we think. If you put tariffs on, you get a stronger dollar. If you put tariffs on Canada, you get higher, not lower, energy costs. How does that bit fit together?
So this is, the real challenge that investors are faced with at the moment. When it comes to the dollar, I guess one of the biggest threats that we kind of saw this week was if you were to get a position squeeze. There's been a little bit of a lightening up of positioning, but investors' kind of positions in the dollar are quite far in the money, and that gives a bit of a cushion that means that they can weather this kind of a bit of a dollar pullback without having to lead to kind of a big squeeze on the dollar that leads to a large sell-off. In terms of kind of what's going to drive the dollar, we think it would be tariffs. We think in the interim, the relatively strong growth of the US and a lot of the policies being pro-growth suggests that US assets can outperform, and that could be a supportive factor for the dollar.
Take us to the Fed then, Michael. How do we watch Jerome Powell now? We know he's under political pressure to cut interest rates. He's, even if, so as Valerie was saying, expected to go into a pause. Is it quite easy for him to just at this point say, well, I need to see policy details, I need to see exactly what your administration means for the economy before we can cut interest rates? Has he got room to sort of sit in that argument for a while before it gets too hot?
So he has got room, but largely because of the most recent inflation print and the fact that that was a little bit softer, which gives him the room to really kind of remain in this pause with a dovish tilt. If that inflation report had come out hot, we'd probably be in a different situation. And, of course, it does mean that there's vulnerability to if you were to get hot inflation prints going forward. We don't expect that, but I think one of the interesting conversations that's happening amongst economists and Fed watchers at the moment is what's happening with the neutral rate. Where is our star? Because it seems apparent that the Fed's policy is not as restrictive as previously thought. You're seeing that in jobs prints being higher than what's considered the kind of break-even of the US economy. And as a result, it looks like the neutral rate, our star, is probably higher than it was before. So it's interesting that there's this kind of discussion going on about, what do we really have restrictive policy?
Yeah. Do we continue to take all the commentary from the Fed at face value? When we hear, to your point about, maybe they can lean a bit dovish because of the inflation print most recently, and when we hear that, we continue to just take it at face value, or do we have to start worrying about how the politics is getting involved here?
I think we're not yet at the point where we have to worry, but we do have to keep an eye on it. I mean, the view that we have is not quite fully priced into the market yet. We think the Fed is on hold throughout the whole of this year.
Right.
In reality, they're likely to continue to have a dovish tilt, which means the market prices in this kind of profile that they will still be cutting at some point in the next 12 months. So it means the market will look always be reading the data as having to revise its outlook to, okay, the Fed's dovish, but it's being challenged by the incoming data.
Mm-hmm. So everything's great in the States is basically what I'm hearing. Economic resilience, you have a deregulation agenda from the new president, you have a America First policy. What could possibly go wrong? Walk us through the potential argument that maybe if you drive a car at 100% capacity, you're going to lose fuel faster. Is that a reason maybe that the kind of acceleration of the states isn't as long-lived as maybe people are pricing in right now?
So we think that could be the case, but it's going to be, we think, more a story for the second half of this year. You know, particularly if you do get tariffs delivered as we expect, that's likely to dampen some of the confidence. There's still likely to be talk about tax cuts, which we think will be very difficult to deliver beyond an extension of the tax cuts that were put in place in 2017. So we think that there is going to be more of a slowdown story coming later in the year. For now, however, I think something that's quite key is investors' positioning. So equity investors in particular lightened up their positions dramatically at the end of last year. What we're seeing at the moment is in the surveys that we ask clients, they're telling us they're becoming much more bullish on equities. When you look at the positioning data, they're not yet holding that position. So even though US stocks have moved back to all-time highs, there's still scope for flows to go into those assets.
So Larry Fink was at Davos and made the argument that so much of the investment coming from around the world, SoftBank, the Ambanis, Dubai, wherever, that Donald Trump is kind of ushering into the U.S., could ultimately undermine gains in the stock market because all that growth is happening in the private markets. To what extent is that private growth the Achilles heel of the stock market?
So I think it doesn't become an Achilles heel. It's very difficult to see that. You know, we do a lot of quantum correlation analysis, like looking at what's the key driving factors. As long as earnings expectations of public companies are continue to grind higher, that can continue to underpin the equity valuations.
Is a strong dollar a headwind for earnings?
It can be a headwind.
Particularly for big stocks.
Yeah, we think given the kind of nominal growth dynamics, what that does to your earnings expectations, it really supports that.
I guess what I'm really asking is, do I want to buy domestic-focused US stocks, which don't have that dollar exposure kind of story translation back in, or do I want to buy big international stocks?
Favour for domestic stocks, because you've also got more insulation from the tariff story and a direct exposure to the domestic growth story.
OK, we'll continue to watch those dynamics, and we'll watch oil after what we heard from President Trump yesterday about wanting a lower oil price. I mean, this is not a new theme, as we said at the top of the programme. One of his greatest hits, calling for lower oil prices. He wants you are happy to go short oil prices, so you do expect his words to have an effect, or something else to push oil prices lower?
So we've been short this week. A part of it is a kind of valuations and positioning story. So in that kind of run-up of oil over the last couple of weeks, you've had a lot of systematic CTA investors who have started to have a large footprint across all markets. They've purchased a lot of oil futures, and essentially as oil has been moving lower, they're getting squeezed out of those positions gradually. Yep. And we think that momentum, downward momentum, is further to go. We also like short oil to combine it with a long equity view, because whilst the equities do have some room to move higher, we do have to be conscious there's a lot of volatility, there's a lot of noise. So we think investors need to be pro-equities, but looking for defensiveness. Short oil is one way to do that.
All right, Michael Sneed, head of cross-asset and macro quantitative strategy over at BNP Paribas Markets 360, joining us on the Around the program this morning. Well, he talked about a lot of the volatility coming from the new president of the United States. We're going to continue that conversation. Coming up, the U.S. president pressures the Davos elite. We're going to head back to the Swiss Alps to bring you the details on his address and highlights from the World Economic Forum this week. Banking, deregulation, oil, and a little bit of tariffs, maybe even talking about the Fed. We had it all. He said a lot in a very short amount of time, really addressing some of those executives that had the opportunity to actually ask him the question. We're going to dive into the market reaction, of course, the reaction with the executives and world leaders on the ground. Stick with us. This is Bloomberg.
I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. I'm surprised they didn't do before the election. That didn't show a lot of love. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. I really would like to be able to meet with President Putin soon and get that war ended. We've been having massive deficits with China. The EU treats us very, very unfairly, very badly. My administration is acting with unprecedented speed to fix the disasters we've inherited from a totally inept group of people. My message to every business in the world is very simple. Come make your product in America. You and Jamie and everybody, I hope you're going to open your banks to conservatives, because what you're doing is wrong.
US President Donald Trump weighing in on the Fed, on oil prices, plenty more, banking. The offer of banking products to all Americans was one of the topics he returned to at the World Economic Forum in Davos. A greatest hits, if you like, of Donald Trump at Davos. Let's head back to Davos now, where conversations around the new US president have really dominated the discussions even before he arrived, and then, of course, whilst he was giving that address. Joining us now with a summary of the week, how it seemed to her, Bloomberg's Francine Lacroix, of course. Francine, good morning to you.
Good morning.
What's been the overall mood created, do you think, then, by Donald Trump? Because it does seem as if executives are a bit more prepared for his policy priorities, for his style, and for the volatility that he can create.
Yeah, and so I think overall it was just a very odd Davos, because all of the action was happening in Washington, and then again yesterday it was happening virtually through the White House, actually beaming in to speak to chief executives here. Now, you're absolutely right. A lot of chief executives say, look, they're better prepared, they understand his style. You have to believe him at face value when he says that he wants to put levies, that he wants to negotiate, that he wants Saudi Arabia actually to get the price of oil down. The concern here, and it's very clear that there's a big divide between the U.S., of course, chief executives, the American bankers, although they were kind of taken in his line of fire yesterday, but they understand a little bit more about what he'll do, and they're really expecting this regulation and the freeing of animal spirits because of some of the things that he plans to do in putting in America first and focus on growth. The Europeans, they're depressed, Anna. I mean, they're thinking, well, what does it mean for us if we don't catch up? Can we catch up? So a couple of chief executives that I spoke to were talking about collateral benefits and saying, like, look, maybe some of the money that doesn't go to the U.S. because of renewables will come to us, but they're in a really tricky position, Guy.
So is it perceived, Fran, as a wake-up call? Are the Europeans expecting this to be a wake-up call, that policymakers are going to act, that Europe cannot wait, that it needs to move now, that it must deliver deregulation, that it must figure out a growth strategy? Is there any optimism that the Trump effect in Europe could actually be positive?
I mean, there's a bit of optimism, but actually there's more concern than optimism. First, by the fact that the way the EU is done and regulated, you speak like one body. And of course, we know that Donald Trump prefers reaching out individually, unilaterally to the heads of state. So he wants to speak to Emmanuel Macron. He wants to speak to Giorgia Meloni. What he doesn't want to do is want to go through Brussels. And then when you look at growth, there are a lot of distracted heads of state. I mean, if you look at the G7, if you look at Europe, almost no one was here. There was Olaf Scholz, and he has elections on February 23rd, and he's not doing great in the polls. So what you have is a very complex situation where you have heads of state in Europe worried about domestic factors, worried about the next elections, not showing up here in Davos looking for capital. And so you kind of wonder, well, if you believe that Draghi report, where you need a vast amount of money, of capital, where do they find it? So again, the conversation here does seem to be leaving Europe behind, especially when you talk tech, AI, and a lot of data centers.
Francine, I thought his address was so interesting in that he really talked a lot about the deregulation aspect that we continue to kind of credit him with, and certainly you see in the market as well. Anna Botín, I thought, asked maybe the most important question there, which is what does that timeline actually look like? How much insight did we actually get on that?
Well, so first of all, I thought the speech was quite remarkable because he was very on message. He was very focused. It was very clear that he wanted to lay out exactly what he was going to do. The setup was a little bit unusual because you had 4 or I think 5 chief executives on the main stage speaking to the president that was at the White House. Look, Anna Botín, and you could see from every chief executive there, they started by saying, congratulations, Mr. President, but this is what I'm doing in the U.S. And for me, it's very telling that Anna Botín, who has a big presence in the U.S., also feels she needs to put more capital in the U.S. to somehow appease the president. So there is a belief in the markets, in some part, of course, understood that if you put so much pressure on chief executives, on oil, on anyone in the world, then capital will come back because they don't want repercussions. We saw what he did with Brian Moynihan, saying that also they need to lend more to conservatives. And it was an awkward response, and then we had a statement from Bank of America. But this kind of pushing boundaries could get Donald Trump results.
Certainly something we're going to be keeping a very, very close eye on. Fascinating conversation to hear from the executives to Donald Trump directly. Bloomberg's Francine Lockwood joining us out of Davos to break down some of the comments from the 47th president of the United States. Let's go to, of course, the main topic here, which is tariffs and what that might actually look like. This week's Bloomberg's mini documentary is all about how the world is preparing for that world of tariffs. Let's take a look at a preview.
Well, he's back. And guess what he's talking about?
We will tariff and tax foreign countries to enrich our citizens.
This is a surprise to no one because it's one of his favorite subjects.
I do like tariff. Tariffs, tremendous tariffs, tariffs that are massive. To me, the most beautiful word in the dictionary is tariff.
Trump has ordered federal agencies to investigate the impact of tariff policies, or in his words, recommend appropriate measures, like global tariffs, to fix these deficits. The topic was low on boardroom agendas under former President Biden, but since Trump's election in November, talk of tariffs has spiked.
The new president has promised to put tariffs on goods coming to the US from all around the world, not just from trading rivals such as China.
He's seeing tariffs as a leverage point to get other people to do what he wants.
In his first week back, Trump threatened to enact 10% tariffs on China, 25% tariffs on Mexico and Canada, and to use them as a tool to try to stop the Russia-Ukraine war.
Trade policy under President Trump has the potential to send shockwaves through the global economy.
Even if Trump's threats don't materialize, the mere thought of a trade war is already upending international relations and forcing companies to prepare for the worst.
I feel like a pawn in a big game of chess.
A pawn in a big game of chess, a really interesting way to describe it, but this kind of deglobalization element around the world. You can watch that mini documentary in full on Bloomberg.com and on YouTube.
OK, let's head back to the World Economic Forum. European Investment Bank President Nadia Calvino weighing in on how Europe can remain globally competitive during Donald Trump's second presidency.
We shouldn't be surprised, and we should pay great attention to what happens on the other side of the Atlantic. The transatlantic relationship is strategic for Europe, and I think we have a shared interest in the US and in Europe to find good ways to cooperate going forward.
And so in the next 12 to 13 months, what are you expecting Donald Trump to do that maybe will change the future of Europe?
Well, I'm more interested in what is Europe going to do in the next 12, 16 months. And what I have seen here, and I also saw on Monday in the finance ministers meeting, and I see around us, is a strong determination to master our own future, our own destiny, and to take the right decisions now so that we can contribute and be sure that we have a strong Europe in a very complex geopolitical context, that's for sure.
I mean, what's the EIB's role in all of this? I know with regard to defense, you've enlarged actually the scope of activities that you can fund. Concretely, what does that mean?
Well, all the diagnostics is clear that Europe needs more integration and investment. So the European Investment Bank, being the financial arm of the European Union, is called to play a very important role in mobilizing the public and private investments which are needed to make the green transition a European success, to reinforce Europe's security and defense industry, to also foster technological innovation and grow Europe's innovative startups. So we will surely be called to play a larger role, and we're already walking the talk. Last year, we mobilized 1 billion euros in investment for the security and defense industry, and we expect to double that amount in 2025 so that we can really support SMEs and the large innovative contractors in Europe.
EIB Bank Presidents, European Investment Bank President, as I probably should say, Nadia Calvino, speaking in Davos. 20 minutes to go until the equity market open. Banking, Italian banking, going to be front and centre at the get-go of trade this morning. Yet another Italian banking takeover attempt. Montpaschi offering to buy Mediobanca in an all-share deal. Well, we'll check those companies. We'll look at what Burberry's doing into the open as well. We'll try and get an idea of what that's going to look like. Plenty to talk about. 19 minutes to the equity market open. This is Bloomberg.
Welcome back to the opening trade. It is Friday, 7:43 here in London. This is the picture on European futures, expecting a little bit of upside in some of these markets. US futures, interestingly, pointing just a fraction to the downside. Let's talk about something that has been ongoing through the Asia session, and that is the Bank of Japan and its rate decision. The BOJ raised its key policy rate to 0.5 percentage point. That's the highest rate since 2008. The BOJ Governor Kazuo Ueda says the future policy path will depend on the outcome of the current move. Of course, he's also been talking about wages and plenty more besides. Let's go to Bloomberg Asia Markets reporter Winnie Xu, who can talk us through some of the lines coming out here. What have we learned then from Governor Ueda's presser, Winnie? What's your take on the messaging he's been putting across?
Yeah, so it seems like the overall tone is slightly on the hawkish side. He sounds pretty confident in terms of the outlook of the economy and also expecting solid results from the wage talks. And he mentioned how the markets seem overall quite calm after Trump was elected and also after Trump got into office. So these are supportive of that rate hike path for the Bank of Japan. However, he wasn't really full-on hawkish in the sense that people were wondering when exactly the next hike might come in and also at what pace. So he didn't really give much hints around those areas. And with the uncertainty around the macro environment, especially with U.S. policies and some uncertainty around what the China's stimulus might look like, that is adding more pressure to the yen at the moment if we expect the dollar is still going to strengthen further. So right now, the overall expectation among market participants is still another rate hike this year. However, the upside risks for another further rate hike after that has increased after today. And we just need to see if the wage data and if the economy outlook is actually on track going forward.
So, Winnie, usually when we see rate hikes in any part of the world, it traditionally means the Japanese equities sell off or the stock market of that company sells or that country, sells off. Is that the same dynamic you're going to see in Japan?
So actually, in Japan is a very interesting case. It might actually be a bright spot within the Asia stocks market right now. So even today, when you look at the market, we already, priced in a 25 basis point hike, and hence we didn't see much moves in the Japanese stock market. However, when you look at just the recent trends, after Trump was elected and even just the past couple of days, Japanese stocks actually outperformed overall Asian market, including India, including China. So it looks like a pretty safe space for investors right now when they're trying to navigate the uncertainties around the U.S. tariffs. And they see that rate hike more as the path of normalization for the Japanese economy. So a stronger Japanese economy would then mean that it would benefit financial stocks and also domestic-driven stocks. And the overall still relatively weak yen is still going to benefit a lot of travel stocks and exporters if we assume that the Bank of Japan is going to guide with a relatively stable increase of a stable increase in the currency.
We'll leave it there. Asia Markets reporter Winnie Xu, thank you very much indeed for running us through what we've learned from the BOJ. Dollar yen currently 155, the dollar on the back foot, but not by that much.
Yeah, the yen up 0.4%. The dollar a little weaker across a number of currencies, partly because of some of the comments we've had about trade from President Donald Trump. But let's talk about that. Our Markets Live executive editor, Mark Cogmore, is with us. Mark, so we've just had a briefing on the BOJ. That's one thing that's moving the yen. But the yen also moved, the dollar side of it at least, moved by what we heard from President Trump around trade. Yet another message that leaves us to think his thinking around China has become a little more nuanced, perhaps, or at least less impulsive. We certainly didn't get tariffs on day one anyway.
I think that's really the key point there, Anna. Good morning. Obviously, he's still using tariffs as a threat. And I think if you take the full comment he made in the interview with Fox News, it was, look, we might have to do tariffs. I'd rather not use tariffs, but we've got that as a big tool against China. So he's clearly brandishing it as a threat. And I mean, it's not gone away. But brandishing it as a threat is very different from implementing tariffs. It's the difference in saying we might attack you versus actually an attack. And I think that given that most of the last year there's been a promise of aggressive day one tariffs, at one point talking about 60% level, down to 10%, but that was kind of the base case expectation. The fact that he's now saying, look, it is a negotiating ploy is very important. Going into the election, there was basically two broad camps about Trump. One was that tariffs were just going to be a negotiating tool. He wouldn't want to kind of blow up global trade, and therefore very few tariffs would come. They'd just be used as a threat for a negotiating tool. And the other camp was like, no, Trump loves tariffs. He's definitely going to implement them aggressively. He's learned from his first time around how brilliant they are, and they're going to come in hard on day one. Clearly, what's happened is the former camp is now looking right. Trump has explicitly said tariffs for him are a negotiating tool, a threat, and not necessarily something he even wants to implement, is the words he used this morning.
Mark, how does Trump pressure on Powell show up in the market?
Actually, not too drastically so far, but the clear impetus is a bit of a steepening of the curve. What you're going to see is that, if he's pressuring there to be rate cuts at the front end, that's obviously softer yields at the front end, but it's going to get people more worried about the inflation outlook longer term, and therefore you'll see the curve steepen as he does that. And of course, you see the dollar weaken as well. So we've seen a little bit of that since his comments last night, but nothing too dramatic overall. In fact, it was the comments about tariffs that had a bigger impact.
Talk to us really quickly about the kind of China impact here as well, because we talk about the tariff story. David Inglis, our colleague over in Asia, made the point that some of these headlines may actually create a bull case for China if the tariffs aren't as tough as people thought. Is that the sentiment in Asia, Mark?
It's not the sentiment, but it's my sentiment, Kriti. I think very much there's a bull case out there because this is a market that's been heavily discounted. Not entirely because of the tariff threat, but very much that has been a component of the negativity, the idea that it doesn't matter what China does domestically. In fact, they're going to be too hindered in trying to stabilize the market because we're at the onset of another aggressive US-China trade war. Suddenly, we're getting a very different signal out of the US, and therefore a large part of this discount probably should be removed. So I think it is the start of a bullish sentiment, but I will say the broader sentiment here is people are resolutely bearish all around me.
Well, we'll see if you end up proving right as a contrarian. We thank you so much. Bloomberg Markets Live Executive Editor Mark Cudmore joining the program this morning. You get more up-to-date analysis from him and the team. MLIV Go is the function on your terminal. Let's go from the macro to the micro, get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So we've got another bit of news flow for the Italian banking sector today in terms of M&A as Montpaschi makes a bid for Mediobanca. Now it is at around a 5% premium on that stock. We can see Mediobanca has actually been one of the underperformers in the space of potentially seeing a bit of value there. But it does follow other deals news, of course, with UniCredit looking at both BPM and then also, of course, Commerzbank over in Germany, and then also BPM itself looking at a bid for Anima. So lots to track in terms of the Italian banking M&A, but this is back in the focus once again as we get this approach, an all-share bid between Paschi and Mediobanca. So that space really in the crosshairs at the moment. Then in terms of Burberry, seeing some really sharp calls higher on this stock in my inbox this morning. This is the company's sales declined by much less than forecast. So they declined around 4% in the latest quarter. There were analysts calling for double-digit % declines in sales. So potentially we're going to see it trimming some of those sharp losses that we've seen as the new CEO attempts to turn around the business. We can see 5 sell ratings on the street, the same number as buy. So pretty mixed picture on the analyst ratings there. Then in terms of Ericsson, this one actually looking weak. Once again, the India business is where the weakness is coming from. The infrastructure, the telecom infrastructure contracts not as strong as expected. Therefore, we're seeing this one indicated lower in the pre-market trading. We're seeing Ericsson in terms of its big rival Nokia. That has been the outperformer, so potentially a bit of downside to come for that one this morning. Then in terms of analyst ratings, got a few out. Anglo-American, that one is downgraded over at Citi after a decent run. And then Greggs, those vegan sausage rolls are favoured over at HSBC, which raises that one to buy. And IAG, British Airways, also gets a buy. That one over at Stifel could be one to watch in London this morning.
Certainly something we're going to keep our close eye on. Our equities reporter there, Joe Easton, walking us through our stocks to watch. As he was speaking, we got some headlines crossing the Bloomberg terminal. This one coming out of China. It looks like Tesla China is recalling about 1.2 million cars on a safety concern. That, according to China's State Administration for Market Regulation. Those comments hitting on two specific issues, the electronic power steering issue and the reversing camera issue as well. So we'll see if we get a statement out of Tesla.
And China also saying it's trying to make things better for consumers around these new energy vehicles, so strengthening consumer rights protection on those. So we'll watch anything related to China auto sales. More broadly then, the picture going into the European session looks kind of brightish, doesn't it? The futures picture looks flat to positive. We've got a bit of M&A to talk about over in Italy.
Very strong performance potentially coming through from Burberry. Joe was bringing us that. The numbers actually look fairly favourable. That's a relative story. There was quite an expectation of quite negative numbers coming through. That doesn't look like it's being delivered upon. So you could see a really big pop there.
Well, and already seeing a pop in the French indexes when you're looking at the futures picture. So perhaps a luxury read-through there as well. Maybe some of the heavy hitters in France certainly outperformed by 0.7% on the futures picture.
So Burberry in focus, Ericsson in focus, number of stocks as Joe was going through could lead the way this morning. More broadly, US futures point a little bit lower, but it has been a busy week. Lots of volatility in stocks and FX markets as a result of what we continue to hear from the President of the United States. We'll, of course, bring you all of those comments, whatever time of day they come, here on Bloomberg TV. The opening trade is next. This is Bloomberg.
Friday morning, a couple of minutes ago until the start of trade here in Europe, stocks have had a really good week. You think about where we were coming into the inauguration, thinking about how bad it could have been. There's a general kind of sense of relief, maybe, that actually the picture looks better. And actually, there's a kind of risk-on growth momentum story, certainly emanating out of the United States right now. At the moment, futures are a little lower, which is interesting because we rallied into the close, so maybe we unwind that. But in terms of this chart, that's where Europe closed, that's where the US closed. Not a clear sense of direction, a little bit of upside maybe creeping into the market.
Yeah, well, that earnings story, that optimism, that deregulation optimism, of course, taking the S&P 500 to a record high yesterday. And it feels like Europe in the futures picture is playing a little bit of a catch-up, at least when you look at Eurostoxx 50 futures higher by 0.3%. But to me, the outperformance really comes from France here, higher by a whopping 0.6%. And then, of course, Anna, one eye on Italy as well.
Yeah, absolutely. One eye on Italy, certainly with the banking sector in focus. We've got some M&A within the financial services sector, and that's something that could move markets. So we'll be keeping an eye on Montpaschi, BNPS. It's made an offer for Mediobanca, so we'll keep an eye on what the shares do there. That's one area of focus this morning. Burberry, a nice China line coming through here. Better performance overall than had been anticipated. In particular, the market's focused on China and the performance there. So how much will Burberry pop at the start of trade? Will we see some weakness coming through in Ericsson, though? This is the telecom equipment manufacturer. And it seems that there's some disappointment in the Indian market. Sales in India remaining depressed. The Q4 numbers then for this business missing forecast due to a lack of an expected rebound in sales in India. That didn't come to pass, and so we'll watch to see how that one performs, Guy.
OK, so banks and Burberry, bit of Ericsson. Plenty of single stocks to watch out for. European equity markets are about to open for the Friday session. Let's take a look at the opening trade and figure out exactly what we are looking at. A bit of catch-up, as Kriti says, a few single stocks to work our way through, as Anna's been indicating. FTSE 100 fairly flat at the get-go. Are we going to see more upside? The expectation is the CAC's going to outperform this morning. Where is that outperformance going to come from? Is it the luxury sector continuing to climb? The stock 600 is up by 0.2%. The Spanish market is up by 0.4%. We'll see what the DAX does. We'll see what the SMI does. They probably take a little while to get going. The CAC 40 could be an interesting trade. Are we going to see a read across from Burberry into the rest of the market, to those China comments which they've been making, which sound a little bit more positive than anticipated, read across into the rest of the sector as well? Or are there other areas? Airbus could be maybe a bit of a drag in terms of the French market this morning. So plenty to talk about. There's a kind of macro top-down Trump story. There's a bottom-up single stock story as we work our way through earnings, both colliding when it comes to the market open. And we're up by, on the 600, 0.3%. What's going on below the surface, Kriti?
Well, the one index we haven't mentioned yet is the FTSE MIB, and that is higher by a whopping 0.6%. And a lot of those gains already are driven by the banking story. We're going to get into the nitty-gritty of that in just a moment as we start to see some of that volume shake out. But, Anna, just from the broad stock 600 perspective, luxury seems to be in the driving seat this morning, and perhaps that explains some of that French outperformance.
Yeah, absolutely. LVMH is there. You can see Richemont is higher. To your point, the French market, Hermes is higher. So Hermes and LVMH over in Paris are a little higher. I don't have an opening price on the CAC here on all the DAX just yet, so we're just waiting for those to come through. But we are expecting then, or we are seeing beneath the hood, some positivity around the luxury sector, and all of this no doubt linked to Burberry, as we're waiting for the Burberry share price to open up as well. So we've got a lot of things that we're waiting for this morning, essentially. Ericsson still not open, Burberry not open, BNPS not open, so Montpaschi is not open, but we do have Mediobanca up by 3%, so that's the M&A story out of Italy coming through a little bit.
And we should mention Montepaschi is now seeing a volatility halt around the opening auction. So we are waiting for the prices around that as well. But remember, one of the biggest pieces of that kind of Mediobanca deal is their stake in Generali as well. So you're looking at some of the movers within the FTSE MIB. Generali is higher by about 0.7%. One of your biggest index contributors to that story as well, as is UniCredit. Because remember, this is as you can see on your board, the four companies I'll go from bottom to top that are all basically invested in each other. UniCredit has a bid for Banco BPM. Banco BPM has a 5% stake in Montepaschi. Now, Montepaschi talking about this Mediobanca takeover. All of them, as we wait for that the Montepaschi opening, kind of in positive territory this morning, Guy.
Absolutely. There's a bunch of stocks we're watching on the 250 that are still yet to get going here in the UK. We're going to watch very carefully what happens with Burberry still not open, as Anna's indicated. Actually, the share price was reasonably positive going into the numbers, which I think is interesting as well, in terms of the momentum maybe coming in to this story. But it does seem to be a read across, which is interesting. It's interesting that Burberry's having this positive effect. The China comments seem to be being taken quite well. That's obviously been the Achilles heel of the luxury sector. We'll talk to Andrea Felstead a little bit later on about how important the US has become. China's definitely taken a sort of a back seat, but maybe that narrative returns, maybe a more positive picture.
Whilst we're talking about banks, and we were just talking about the Italian banks, worth just lingering on another line that crosses the Bloomberg terminal this morning. Commerzbank would review a proposal from UniCredit if it comes. Not entirely clear where that line is coming from at this point, but that is interesting to throw into the mix as we watch the attempted creation of a third big bank in the Italian market. There are other players with other intentions, and UniCredit is one of those.
Yeah, certainly something we're keeping an eye on. Commerzbank shares higher by about 0.8% in today's trade. Let's talk about that kind of banking consolidation story, that deregulation story on both sides of the Atlantic, and how it feeds into these markets. Joining us now this morning, Maria Vaitmane, head of equity research over at State Street Global Markets, joins this program. Maria, pleasure to have you on as always. I think the big picture topic for at least this week has been, what does Donald Trump mean for these global markets, especially as you drive equity indexes on both sides of the Atlantic to these extreme highs? How much of this is really due to those deregulation ambitions that he has?
Yeah, good morning. I think that's probably the most difficult question to answer, what Donald Trump means for markets, because so far he has announced lots of kind of executive orders, but the most important question on tariffs hasn't been answered yet. So it's every day we watch Bloomberg or other news outlets, and there are lots of kind of conflicting information. I'm putting tariffs on, I'm not putting, I'm being friendly with China, I'm doing this with Canada. So there is still very little clarity, and I think market is taking it a little bit positive because expectations were for very aggressive tariffs on day one. So there is a little bit of kind of relief rally based on that. In terms of deregulation, it's something that we need to see before we really believe it, because again, expectations are high, so it's about delivering as opposed to kind of talking.
So in terms of that delivering story, though, I think that brings us right back to this banking consolidation question here in Europe as well. We're seeing this massive surge this morning in some of these Italian banks, certainly in the French ones. Now we're getting headlines out of Commerzbank as well. But this is a question, as Guy and Ann remind me, that has been going on for years, if not decades. Do you trade the hopes of banking consolidation in Europe?
And I think that's a really important question, because we know the consolidation needs to happen, and I think institutional investors already traded on those hopes, because banking stocks perform quite well. They have lots of cash. They're strong. But what we see is in State Street custodial holdings, institutional investors already bought a lot of banking stocks. Banks are the most crowded sector in Europe, so institutional investors kind of positioned for it. And now again, the question of delivery, and I worry there could be quite a lot of setbacks. So far we've seen kind of politics getting kind of interfering, particularly in Italy. But banks are healthy, banks have money. Can they grow? Big question marks. Investors are very much positioned for the yes answer.
Okay, so what else is that data telling you? What has it changed post-Trump? Since the election, since the inauguration, what is that custodial data telling you about how investors are positioned? Has it changed significantly as a result of his arrival?
Yeah, that's really interesting, because if we think back to kind of end of last year, when everybody were writing the kind of year ahead outlooks, everybody were extremely positive on markets, on equities, tech, favorite sector, U.S. exceptionalism. Then we had a little bit of a setback, and now we're kind of returning back to all-time highs. Institutional investors have not panicked. They stayed with trades ahead. The U.S. still the kind of the preferred place to be. Tech is a kind of crowded place, but investors not selling out of it. Big positions in European banks, but not very much else. So it's still very concentrated in mega caps and quality and growth. That's the kind of the trades we had at the end of last year, and investors sticking with it. Maybe like activity is a little bit slower because of this kind of wait and see. We need to see what will happen. But people are not unwinding positions. People are not finding. We're watching very carefully shorting interest from security lending data. Again, no big shorts position. People are really just waiting.
Okay, so because we probably don't know yet, it's too early in this process to really get a view of what is happening here. But are they adding to these positions?
Gradually, not in a big volume, but we're not. The point I'm trying to make is that nobody changing anything. And yes, tech is still the most bought sectors since the beginning of the year. So people adding to that position, people buying quality. Quality kind of makes sense even in a world where you expect like more shallow hiking cycle. And if you think what's quality, it's our Max 7 stocks. So that kind of position getting bid up a little bit more again.
Can I ask you about luxury names, Maria? And this takes us on to a China conversation, doesn't it? Because really interesting the way that the Burberry numbers are being received this morning. So that stock up as much as 15% out of the gate, now around 11% higher this morning on my screen. But this is having a read across into the rest of the luxury sector. Kering is higher, Swatch, Moncler, LVMH, all these names trading a little bit higher, as if this is, yes, sure, there's some specifics perhaps around the turnaround of this business, but it is being adopted by the markets as a positive luxury, and that probably means positive China story. How would you play into that?
We know that institutional investors have been underweight European luxury stocks very, very significantly. So there is like people exited the sector last year. And I think a little bit like position squaring is there, and kind of maybe closing your shorts. So that's perhaps important. I have to say I'm still a bit skeptical about kind of major China turnaround, because what we know the problem with China was that very, very depressed consumer sentiment, and we haven't seen kind of a big recovery, and the kind of the policies that Chinese authorities have implemented was kind of trying to stimulate the demand. Haven't seen kind of major improvement there. So I think it's probably more of position squaring than really kind of, okay, now we're a little bit more positive on China.
On China, though, Maria, is there a cyclical story that can get you excited about China, or is there just too much of a structural headwind given the geopolitics?
We are generally concerned about China kind of overall consumer indebtedness, lack of like consumer confidence. So that's a big issue. And as I said, the policies that have been implemented, they're really not that I mean, it will take a long while for them to kind of inspire kind of domestic activity there. But geopolitics is probably the biggest kind of medium-term hurdle to get through, because I mean, tariffs almost kind of binary. Is that will they do it, won't they do it, and what would be response? So I think until we get clarity there, it would be very difficult for investors to start closing that underweight position.
Maria, great to catch up. Always a pleasure. Thank you very much indeed. Maria Whitemana, Head of Equity Research at State Street Global Markets. Call 6 looks like this morning. As Anna's been indicating, luxury stocks certainly on the front foot. You can see that represented very well by LVMH, up quite nicely. But LVMH isn't at the core of the story. Joe Easton's here.
So it is another big day for the luxury stocks, kind of reminiscent of what we saw around a week ago when we got those numbers out of Richemont. We're seeing the whole sector rising at the moment. Burberry up 13.5% now. Big move on that one. Kering as well. A massive read across, up 8%. And some of the other stocks, as Guy mentioned there, LVMH, Montclair gaining as well. It does look like the more beaten down stocks in the sector. So the Kerings rising with Burberry, the ones that have suffered the most, coming back up, a real boost for the company. The sales not as bad as expected, still actually declining by around 4% in the latest period, but actually much better than analysts were expecting according to the numbers on that. So that's the relief we're seeing finally, a bit more relief coming through into luxury today. Then one sector going the other way, this is telecoms, telecom infrastructure. Ericsson slammed, it was down almost 10% at the open, now down 7.5%. Now India, still the weak spot in terms of their infrastructure, and analysts in the notes I was reading saying that the Vonage business that they bought from the US in 2022 not paying off enough quick enough, and that is actually also part of the weakness. They haven't seen the results coming through from that new unit, so that is hitting the stock as well. We're seeing Nokia coming down. Nokia reports next week. We'll get numbers from them, so that is also an interesting read across on that one. Then the Italian banks, we can't get enough Italian banking M&A news. We are seeing Mediobanca coming up almost 3% at the moment, but take a look at Montpaschi, down 9%. That is the acquiring company, so it would be around 13 billion. I think I read the figure that it would be paying out, but it is all in shares, so it's an all-share deal. So dilution looks to be the takeaway from that one. Massive dilution for investors in Montpaschi, and therefore that one really slammed. But we're seeing positivity in the other banking stocks that we have seen doing a bit of M&A, reported speculation on M&A, including BPM, UniCredit, those ones a little bit higher at the moment. Then one that we hadn't touched on was Rolls-Royce getting a big submarine contract in the UK, so we tend to think of them more doing the aerospace engines for the jets, but they also have a submarine unit as well, and they've got a big contract from the UK government announced last night, or reported last night, so therefore extending the gains, a stock that's doubled over the past couple of years. Rolls-Royce edging very slightly higher in London this morning.
Joe, thank you. Joe Easton from our equities team. Talking about the Italian banking sector and much besides, we will focus once again on Italian banks, though, coming up. Yet another Italian banking takeover attempt then. Montepaschi offers to buy Mediobanca in an all-share deal. Joe's been through the market response in the short term. We'll get the long-term view. This is Bloomberg.
Welcome back. You're getting French economic data. Let's talk about the breaking news that we've got coming through. In some ways slightly better than expected, but in some ways actually telling a familiar picture for France. So manufacturing PMI 45.3, that's up from 41.9 and better than the survey number. However, the services number drops to 48.9, which is worse than the last number we had at 49 and worse than the survey number. That takes the comp number to 48.3. This is the fifth month in a row that France has got a sub-50 comp number. That is not painting a particularly good picture for Europe's second largest economy.
Yes, absolutely. Lots of those numbers then below 50 in contraction territory when it comes to the French economic story. We are also keeping an eye on what's going on with oil prices, given what we heard from President Trump overnight. Oil is heading for its first weekly decline of 2025 after President Trump said he would ask OPEC to lower prices. Let's get more from Bloomberg's energy reporter Anthony DePaola, who can shed some light on all of the themes at play here. So President Trump asking OPEC and the Saudis specifically, name-checking them, for more oil. He's done this before. Is there anything different about this request this time around?
Yeah, hi, Anna. Oil is kind of topsy-turvy this week, as we saw oil increasing at the start of this month based on that prospect of some restrictions on Russian oil, so taking oil off the market. Now, as soon as this week, Trump is coming in talking about drill, baby, drill in the United States, and also asking the Saudis to bring more oil on the market. There is that concern there. He's done this before in his first term. This time, he's giving a little bit of a carrot as well. This time, he's asking the Saudis to increase oil production, to bring the cost of the oil down, implying that will reduce inflation, and then saying he'll be able to reduce interest rates. So, of course, interest rates would be beneficial for people that are borrowing, like the Saudis. We're seeing a lot of debt on the market as the Saudis try to finance a lot of infrastructure build out and really a transformation of the economy to prepare to get away from oil. So there is that kind of side of, if you give me some more oil, that will bring costs down. We'll be able to reduce interest rates, and that will help everyone. So that's that kind of carrot part. A little bit of a stick part is he's saying that those high oil prices have been helping Russia in the war against Ukraine, and that OPEC Plus and the Saudis are in part responsible for that. Of course, let's remember Russia is a member of OPEC Plus, and they would be impacted by that. So that does put OPEC Plus and the Saudis kind of in a difficult pickle there, Anna.
So, Anthony, speak to us a little bit about the other things OPEC Plus has to take into account. Talk to us about break-even prices, for example, when we're looking at Brent crude at about a 78 handle.
Yeah, the break-even prices, particularly for Saudi, are going to be higher than where we are now. As I mentioned, they've got a lot of infrastructure and big economic transformation projects to finance, so that's requiring a lot more capital. Other things that they are going to have to take into consideration is, again, Trump's policy towards those countries that might be subject to sanctions. Russia already is, Iran already is. Would those be tightened, and would that take more oil off the market? So if OPEC is going to be bringing more oil onto the market, they're going to want to be sure that they'll be able to have a market for that and that it won't end up in storage, because that's something that weighs down on price as well, too. So if the point is to bring more oil onto the market, reduce prices, drive Russia to the table, well, if there's a negotiation, that possibly leads to some lifting of sanctions and then more Russian oil coming to the market. We're talking hypotheticals here, but these are the things that the Saudis and the wider OPEC Plus group are going to have to be walking through when they're considering that decision.
Anthony, does the market believe Trump? It's fascinating to watch, actually, the price reaction. You did see a drop, and in some ways that drop has stuck when it comes to the Brent price.
Yeah, we are seeing people that are taking some of the hedging some of the longer bets for lower prices. So there is some protection there in terms of the market towards potentially lower prices. The market is also kind of scratching its head about the whole drill, baby, drill context, asking whether the U.S., which is already producing near record levels, whether there's more space to bring more oil on there, whether the independent producers in the United States will bite on that at these prices. And again, that question mark around Russian, around Iranian production, whether that's going to be coming back into the market or being restricted, that's a real question mark overhanging. So I think we'll probably see this oil bouncing around. Traders are telling us they expect more volatility this year than we saw last year when we were in a very tight range.
It's interesting. Also, investors in US oil have wanted money back, not oil back. Discipline's been the main watchword over the last few years. Bloomberg Energy reporter Anthony DePaola, thank you very much indeed. Let's go from barrels of oil to banking.
Let's do it. We're getting headlines here across the Bloomberg terminal that Montpaschi shares are down as much as 10% in trading in Milan. This comes after Mediobanca says that the Montpaschi's all-stock offer bid is being viewed as hostile. So you can really see in the kind of sea of Italian banks that we're keeping an eye on, real underperformance coming from Montpaschi. Those shares down about 9% and falling. Let's bring in our managing editor for Southern Europe, Tommaso Ebhardt, joins the program. Tommaso, is this a surprise?
So the bid is a surprise, not too much to our readers as we scooped about it overnight, but generally speaking, yes, it is a surprise because Monte dei Paschi is coming for a very tough period. It was nationalized in 2017, and this is a sort of renaissance for the oldest bank in the world, bidding from the Mediobanca, who is seen as the investment banking jewel of Italy. Yes, Mediobanca sees the bid as hostile, as we already reported in our original story. This was not agreed with Mediobanca, but the biggest Mediobanca investors are also the biggest Monte dei Paschi investor. We are talking about two billionaire families. The Del Vecchio family, the Ray-Ban owner, they own almost 20% of Mediobanca and 10% of Paschi. Then you have the Roman tycoon Caltagirone. So this is a bid by a smaller bank to buy a bigger one in Italy. Quite surprisingly, no one could have expected it a few months ago, but things are rapidly changing in the Italian banking industry.
So things are rapidly changing, Tommaso. You've been through some of the investors they have in common. Who are the other actors we need to keep an eye on? Because clearly consolidation has been a wider theme, not just between Monte dei Paschi and Mediobanca.
But first of all, we have to look at the government reaction. We suspect the government will be quite supportive of such a deal because the Italian government has tried for years to create a third banking group to rival with Intesa Sanpaolo and UniCredit, to have a third banking pole. They've tried to do it with Monte dei Paschi, then Orcel arrived and made a bid for Banco BPM, which had just bought a stake in Paschi itself. So Paschi is clearly central to the government plan to create the third banking group, and the Italian government is still the biggest investor in Paschi with almost a 12% stake. So let's keep an eye on what Rome says.
What do you think Andrea Orcel makes of all of this? Is he in any way involved? Is there a ripple effect that happens out of this deal into the other deals?
I mean, in Italy, in the Italian banking industry, they say that Andrea is looking at everything. But as we know, a couple of years ago, Andrea Orcel was trying to buy Paschi from the Italian government, and talks collapsed at the very last minute. Then he decided to go after Banco BPM, which is bigger than Paschi and based in the wealthy Milan region. Now the Italian government is reviewing that bid with its special powers, and the Italian government will keep a close eye on Monte dei Paschi. So at the moment, clearly, Orcel is not involved directly in this deal, but he's the person who somehow generated a ripple an effect in the country by making a move on Banco BPM.
Okay. And we are seeing those ripples in the markets this morning. Bloomberg Managing Editor for Southern Europe, Tommaso Ebhardt, thank you very much. So Monte dei Paschi is down 7.8%, so moderating, paring those losses just a little bit. Mediobanca as the target, up by just over 3%. Interestingly, UniCredit is gaining this morning, up by 1.6%. Let us tell you what is coming up on the programme. We'll talk more about the BOJ, but actually we'll have a wider conversation about FX, because there were a lot of wider FX themes in play this morning. We've seen the BOJ's move already, their rate hike. We've got data out from the euro area in the shape of the French PMI. We're going to get the German PMI coming shortly. We'll break down all those numbers, what they mean for FX markets. Where does the strong dollar trend go from here? Yusuke Mieri is going to be joining us. That conversation next. This is Bloomberg.
We are seeing German PMIs cross the Bloomberg terminal as we speak. The manufacturing PMI rising to about 44.1. The estimate was 42.7. Services PMI rising to 52.5. The forecast there was 51. So contraction continuing in the manufacturing PMI in Europe's largest economy. Off the back of that, though, when you look at the euro picture, Anna, you're actually not seeing much movement. 104 still on that handle.
We do have a stronger euro. We have a stronger euro this morning, and it has continued to strengthen with this data that has dropped. And I wonder if it's the you know, this number on manufacturing, yes, it's still firmly in contraction territory, but it is quite a bit above the estimate. Whether this suggests something a little more positive, or if this is entirely maybe a dollar story, because we see a fairly sizable dollar move overall. Of course, the yen in focus because of what we heard from the BOJ and that dollar move. So maybe none of this is to do with the Europe data or the BOJ, and it's all just the dollar trade.
Almost certainly that's a huge factor. But broadly, the PMIs are slightly better. And they're not. They are still, to your point, contractionary. I think the comp number in Germany is just now positive, but
barely.
We're barely positive. Basically, we're kind of stagnating. But at least we're seeing maybe signs of improvement. The French number, that's 5 months in a row we've seen contraction coming through. But maybe just at the margin, things are starting to improve.
So not as bad as expected. It's equal to good.
Right, well, no, exactly. Yeah, precisely. Is it getting worse? Is Europe rolling over, or is it stabilising?
Yeah.
Because then you've got the factor of inflation to fold into this as well, which still looks fairly sticky, which is interesting also, comes out of this.
Absolutely. Let's get an update on both of those dimensions then. We're joined now by Bloomberg's Jana Randau for more on the European growth and inflation story, what this means for the ECB. Jana, your thoughts then on this data, and we're seeing a little bit of positive euro reaction to it, as if the market is clutching at the straw that is a better than estimated manufacturing PMI number, even if still in contraction territory.
It's certainly a ray of hope, I would say, but I would say it's much too soon to talk about recovery or even, you know, a turnaround in what's been a really bad period for the German, but also for the Eurozone economy. It's a sign of stabilization. You're right to mention that. We're seeing that the manufacturing sector is contracting at a slightly softer pace, which is good news. But again, it's still contracting. And in Germany, on the services side, we're seeing a little pickup there at the start of the year, which is encouraging. But then looking at the composite number, it's just barely above 50. And that gels with what we heard from the Bundesbank actually earlier this week, where they said, the economy probably contracted at the end of last year. And stagnation is essentially the best that we can hope for the German economy in the first quarter as well. So we're far, far from that recovery that everybody is so desperate to see.
So, Jana, you mentioned the monetary policy side of that equation. We, of course, are coming up, I think we're about a month out from the German election as well. What kind of fiscal policies do we need to see to really see some more improvement in these numbers?
Yeah, I mean, of course, we need to see some spending there. Public spending has actually helped prevent an even worse outcome for the German economy last year. But what is more important actually than fiscal policy is private investments that are, you know, very sluggish and that really need to improve big time to help the economy when you think about it in a cyclical way, but also to fix all those structural issues that the German economy is facing when you think about energy transition, digitization. And there, the government's real job is to make that happen. You know, you can talk about easing regulation, the regulatory burden. Coming up with some certainty actually. For investments, because that is the main obstacle for companies. So there's a lot to tackle for the new government, and fiscal policy does play a role. But I would say there are many other things that need to be fixed as well.
Jana, can I just go to the inflation story? Because we wrote a nice piece overnight talking about sticky prices in Europe and how the ECB is going to be reacting. The PMI data always comes with a comment from Hamburg Bank. And they reference with when we talk about the German numbers about inflation. On the price front, this is a quote, on the price front, there is no relief in the service sector. Input prices increases have accelerated, likely due to higher CO2 tax that kicked in on January the 1st, affecting sectors like transport and hospitality. Does the ECB look through that? Is the ECB going to look through some of this inflation and focus on the growth story?
It's difficult to say. I mean, they have their eyes on services for sure, and they are actually expecting a certain repricing. Madame Lagarde was talking about certain latecomers. If you think insurance contracts, for example, they reprice once a year. Services is something that's eyed very closely. That needs to come down. It's in the Eurozone currently running at a clip of 4%, which obviously is much too high. So something needs to happen there. When you mentioned carbon prices, that of course was expected. That was priced in. That is not much of a surprise. But some of the other drivers of services prices, we need to see some improvement there. Yeah, maybe it's January is too soon to pass judgment there, but March will be an opportunity to see whether that disinflation story that the ECB is currently still expecting is playing out.
The comment is that actually companies have got strength enough to pass through some of these prices to clients, so maybe that is something to be concerned about. Jana, thank you very much indeed. Jana Rando joining us out of Frankfurt. Yusuke Miari, FX strategist in Mura, joining us around the table. It's a little bit of a move in the euro this morning on the back of maybe this data, but the bigger move appears to be being driven by the dollar. Is the dollar kind of at the centre of everything for you right now?
At the moment, exactly, yes. I mean, Trump's policy, I think everyone, most of the clients that I talk to, talks about only tariffs these days. So, I mean, tariff concerns have been moved the dollar stronger in Q4 last year. And now we're seeing the retracement of it because he's not too, aggressive about the tariffs these days. So that is, dollar move and the tariff concerns, those are driving the G10 FX markets.
In terms of what does drive the euro, is there an expectation that actually, unlike over in the United States, we don't see a pause, that the ECB is going to kick in with a significant number of rate cuts? Or is the inflation story enough maybe to cause the market to pause and rethink that strategy?
I think if there is no tariffs on the euro, from US to the euro, then I think we could see a continued retracement in the euro. It could go to like 1.06 and even higher. However, if you see the growth in the euro area and the ECB's policy reaction, still they are concerned about the local growth being stagnant. So if there's a, if there's like a 5% tariffs from US to the EU and then ECB continues cutting, then I think the medium-term trend of the euro is still to the downside.
So everything comes off tariffs?
It comes off tariffs, but it's almost, I feel like we're having a little bit of a reversal of the dynamic we saw in 2021, where the increase in commodities, it was very supply-driven inflation. This is different. We're talking about a demand-driven inflation this time around, unless you look at Europe and then the natural gas prices, or unless you look at Japan and the energy prices. Does that build in a correlation, a stronger inverse correlation, as I'm working through it in my head, between commodities and how you trade the yen and the euro?
Yes, well, if you see the correlation between the dollar and the commodity price in general, they tend to correlate pretty well. So if commodity prices are actually going lower because of the Trump's, energy policies to lower the energy prices, then the dollar strength story could ease a bit. But I think people are still concerned about the growth stories when we talk about the euro dollar, especially low growth in the euro area and this, resilient growth in the U.S. So commodity price is an important factor, but I think what the market is right now focused on is more about the growth between the U.S. and euro area.
So how much growth is too much growth coming out of the United States? How much of deregulation or resilience would undermine that dollar strength story?
It's difficult to quantify, but with current GDP growth continuing and even a modest pickup, I think that could, people think that, okay, the Fed is unlikely to cut. If you see the market pricing, it's now pricing in around 40 basis point cut for this year. But if you ask me the same question like about 3 weeks ago before the CPI, it was less than 25 or like around 25. So if we see even a modest uptick in CPI and modest uptick in growth, then I think the dollar story will just continue.
OK, so that's the dollar side. And let me focus a little on the European side of things, because we've had this strong data out of, take that back, not strong, better than anticipated data out of certain parts, certainly Germany on the manufacturing side. And we've seen traders then pairing their bets around the ECB as a result of this. Is this enough to make you rethink what you do on the ECB, what you expect from the ECB, either next week or further down the line? Or we're still clutching at straws when it comes to the European growth story?
Our base view is unchanged. We think the ECB will likely cut by 25 basis points next week and continue cutting by each meeting. As we discussed here, like PMI has been stabilizing rather than recovering. And we also have to discount the fact that PMIs these days tend to perform well in Q1 and Q2, even though those are seasonally adjusted. It could be the reason due to seasonal adjustment during the COVID pandemic period. But still, I think the market is somewhat discounting that seasonal adjustment factor when taking in today's PMI figures.
We're still waiting for the UK PMI. That comes, I think, 9:30 London time, so in just under an hour. Consumer confidence was pretty weak overnight. And we've seen a lot of volatility and negativity around the pound, and that bond market story ran for a couple of weeks. How much negativity are you expecting the pound to price in, or not?
This is a pretty difficult question. I mean, if you see the UK growth overall, especially the inflation side, inflation has been sticky, and that was the reason why the BOE was difficult to cut compared to the ECB, right? But we had a mini debt crisis again, which has put the pound to the downside. That seems to be easing, and the market have acknowledged that, okay, the BOE is likely to cut in February by 25 basis points. I think that, at the moment, relieve the market. But if that concern comes again, then I think that's going to be a big trouble. But at the moment, we're relatively positive on sterling against the euro.
Let's talk about the Japanese yen. So the press conference was fascinating to follow. Came in, I think there was an expectation of pretty much what we got. He sounded initially a little bit hawkish. That seemed to be the tone. But by the end of it, I'm left wondering when the next rate hike is coming through. So what is your sense of kind of where we are coming out of this press conference in terms of the cadence of rate hikes from the BOJ?
Yeah, I think our view is that the BOJ's rate hike is going to be once in 6 months. I think that's like the optimum, appropriate timing for the BOJ to hike for the next hike. BOJ hiked in July last year, now January, and I think they're looking for a July hike again. But if you closely listen to BOJ governor's speech, he didn't clearly mention when it's going to be. Yeah. He left the door open. And I think that's related to one political calendar that we have in Japan in this summer. So we have upper house election due in July 2025. So that could, make the BOJ's rate hike pass less smooth. And if that's the case, maybe BOJ may have to hike in June or maybe delayed to September. So I think the BOJ left the door open to have the every meeting live.
Do we still need to be talking about levels for currency intervention? Give us a range on the yen, if you can.
Yeah, I mean, in terms of the intervention, I think there's no, explicit level that could trigger the MOS intervention. And at the moment, if you closely listen to MOF officials, verbal interventions, I think 160 is not the level that they will come out. It could be a bit higher. But at the same time, the BOJ is also cautious about the yen weakness these days. And he implicitly mentioned that one of the reasons why the BOJ hiked today was because of import prices going higher because of the yen depreciation. So with the combination of the BOJ and MOF still vigilant about the yen weakness, I think dollar yen's top side is relatively limited.
Great to see you. Thanks for stopping by to update us on a range of different FX stories that we're watching so carefully this morning. Yusuke Miyari, FX strategist, joining us from Nomura. Coming up, we're going to take a look at today's big take, which weaves together Elon Musk's scrutiny of the new Air Force One that Boeing is currently building and is behind schedule on. He's pretty good at engineering. Kind of, how does that relationship work? How is Kelly Ortberg going to deal with Elon Musk staring over his shoulder? I think that's a really interesting conversation. We'll talk about the numbers from Boeing as well. Yesterday, GE out with figures as well. All of that up next. This is Bloomberg. Let's talk about aeroplanes. President Trump is displeased by budget overruns with the next Air Force One. He's got some interest in this one. Meanwhile, Silicon Valley wants to rethink the Pentagon's war strategy. It all comes together in the form, you could argue, of Elon Musk. Elon Musk paying a great deal of attention to this Air Force One program, which is behind schedule. There's a fantastic big takeout on all of this today. Bloomberg's global aviation leader, Benedict Camel, joins us now to talk about all of this. Benny, if Musk is paying attention to Air Force One, which is a big Boeing project, which it's struggling with, but it's got lots of other projects it's struggling with as well, how far does Musk's potential interest in Boeing extend, do you think?
Well, that's what's not quite clear at this point. What we know, what our reporting shows, is that he showed up at the Air Force One site in Texas late last year in December, and he had a look at the new Air Force One that's being built there very slowly, much slower than Donald Trump or really anyone had hoped for, far more expensive, far more complicated. And he was there with Kelly Ortberg, we found out, to get a sense of where the project is. Now, you could think that that's a good thing. You know, Elon Musk knows how to fix things. He knows how to get things into the sky. So for him to take a look at what Boeing's up to, that could be seen as good. But let's not forget, he's not anyone. He's a competitor. He has SpaceX. He's also known to sometimes break things and then reassemble them in a very different way. Just look at X, or formerly known as Twitter. So this is a bit of a double-edged sword, really, for Boeing. It could go either way, and that's sort of the complexity for Kelly Ortberg, the Boeing CEO. How does he navigate that? Excuse me.
So, Benny, at the same time as we got these kind of developments, we also had an earnings report coming out of Boeing. Walk us through those numbers.
So the company's really only supposed to report earnings next week on Tuesday, but they came out, this is the second time they came out ahead of time. So late yesterday, they came out with a set of numbers, not the full set, but at least sort of a teaser that gives us a sense of just how bad things are. Now, it's not a massive surprise because we knew that the fourth quarter would be ugly. That's when they had that big strike, and really production was pretty much not happening for the duration of that quarter, and you could see it in the numbers. Revenue is not where it was supposed to be by all three measures. The loss was big again, and then surprisingly, fairly big additional charges in the defense business. We've paid a lot of attention to the civil business, but the defense business is also not doing well. That includes the Air Force One plane, more cost overruns there. It also includes the aerial refueling tanker and a couple of other programs. And the question really is, at what point might they finally be able to ring-fence these contracts that are bleeding money? That's another big task ahead for Kelly Ortberg.
So that's the challenge ahead. What about the opportunities? I think your team, Benny, has an interesting scoop on some asset sales that could be attracting some suitors. Run us through that detail.
Yeah, so really the question for Boeing is, will the company stay whole? Will they stay where they are now? Might we see some disposals around sort of the edges or a more wholesale sort of remake of the company? One asset that is highly profitable and that has attracted some scrutiny is a business called Jeppesen. It's navigation software, navigation maps. That's a business that's actually making money. That's a rare occurrence inside Boeing these days. And they've attracted some interest from both strategic and financial buyers. The bids are in, the preliminary bids. Companies like GE, RTX, but also sort of some private equity firms are sniffing around that. Again, it's not clear whether Boeing will actually want to sell it. Ultimately, they could earn a nice bit of cash off that, but you know, once it's gone, and then you're left with the rest. So maybe there's a way to keep it, to keep building it up, and then eventually at some later point sell it, or maybe just hold on to it. They do have that extra funding that they got last year, $24 billion, and that really saved them into the fourth quarter. So they have a little bit of wiggle room to wait, and they might see just where do the bids come in. Is it attractive enough to offload it, or might we keep it? That's something we'll keep watching in the next couple of weeks, and it's something that investors will ask about when the company properly reports earnings on Tuesday.
Benny, thank you. Benedict Camel, Global Aviation Editorial Lead at Bloomberg. Let's pivot to the luxury sector. Burberry shares are soaring this morning. The biggest gainer on the European Stock 600, in fact, this after the luxury goods maker reported a much smaller decline in sales than had been expected in the latest quarter. We're joined now by Andrea Felsted, who covers luxury for Bloomberg Opinion, so writes about this stuff day in, day out. Andrea, thank you for joining us. So how much of this is Burberry specific? This is a business with a new creative director, newish, and it's undergoing a turnaround. How much of this is the wider landscape?
It's probably a bit of both. The US, Americas, as they call it, they actually saw sales growth. That was also the same with Richemont. The American consumer, it was probably the first to go into the luxury downturn. It seems the first to be coming out, helped by, you know, roaring stock market, crypto. They seem to be willing to spend on luxury. We saw that with Richemont last week. So they're definitely getting a lift for that. They do seem to be doing a few things. They've had some interesting campaigns, although interestingly, the Always Burberry weather campaign was actually started off by the previous management and sort of tweaked a bit and amplified, they say, by the new management. They're focusing on their outerwear, their scarves. They seem to be doing well. They also had a big markdown program a big sale, which also contributed sort of low single digits to their comp. So it's probably a bit of both. Luxury definitely seems to be turning a corner a little bit, led by the US.
What about China?
China's not getting any worse, so that's good. But it's not really improving yet. It's sort of bumping along the bottom. All the action this year will come from the US. You know, the US consumers have got to carry that bling baton until China's ready, hopefully, maybe the second half of the year, maybe next year, to pick it up.
Sure, got a bling baton, actually.
Very shiny. Maybe don't look it in the eye.
Maybe Burberry will start making them. Walk us through that kind of turnaround story in terms of really tackling and appealing to the American base. There's a question of the new creative designer and whether he could maybe bring Burberry into a more mainstream arena. Is that happening?
There are signs it's happening. I actually was the only person that liked the previous iteration of Burberry. I thought it was great to have
you weren't the only one.
I was the only one. I was the only one out of all the markets. I really was. I liked the fact you had a UK CEO. I liked the fact you had a UK designer who really seemed to get Burberry's Britishness. And it wasn't a tacky version of Britain. It was a cool, quirky... You know, I do wonder whether some of the work they put in the last 2 years actually just, you know, it did. They probably went a bit too fast, a bit too far on the price increases and the handbags. But I actually wonder whether they did start to build a base, and suddenly it's starting to take off. It started to take off, but unfortunately they made that. You know, they had that rather knee-jerk CEO reaction, and the new management are just making a few tweaks, and it's starting to work. But you've got to put that work in elevating the brand, energising the brand, and probably Daniel Lee and what they were doing did sort of pave the way. But that's a controversial view. No one agrees.
They're definitely leaning on the check in terms of what's on the website right now. Arnaud was at the inauguration.
Yeah.
Does that just go to your point about the importance of America?
Exactly,
is there something more than that? How important is it? Just the fact that he was there? He's clearly kind of close to them, but is it a reflection of just how important the US is going to be?
It really is. Yes, the US is really going to be the growth driver this year. They don't want anything to damage that, like tariffs. You know, I mean, luxury isn't that exposed to China tariffs because most of the manufacturing is in Europe. But if there were some broad European tariffs, as he sort of hinted at, that would be really damning. You don't want the US, you don't want any problems in the US, while China is struggling.
You know, Arnaud was late for Paris Fashion Week as a result of being at the inauguration. That was, I was reading, you know.
So
that's where the focus of...
And that takes us beautifully onto the weekend. What we're going to be looking at this week. Paris Fashion Week, is it a big deal? What are we watching for here? What's going to be cool? What's not going to be not? You're talking the wrong question.
It's always a big deal. I mean, one of the things that I think people will be watching, they'll be trying to read the tea leaves or the sequins to see if there are any more designer changes coming. We've had this big... You know, this big turnover of creative directors. And that's because, really, for the last 5 years, they haven't had to work that hard to get sales. They haven't had to bring out new products. But, you know, when people are cutting back, they really have to work hard on those. But quiet luxury has been terrible for luxury because you can't rely on your logos to sell things. You have to work.
You need the bling baton.
Yeah, you need the bling baton. You need bling back, really, to help them. Goodbye, quiet luxury. Hello, bling. That's what they need.
I'm going to be watching the downhill. I'm going to be watching the football.
The downhill, that's not a football reference, is it? That is the Kitzbühel.
No. That's the Kitzbühel downhill.
Okay, just for
that'll
clarity.
be my Sunday evening to watch that.
I'm going Australian Open finals. That's where
that would be good.
That's
really
where
looking forward to that.
We're going to talk about this on Monday. That does it for the opening trade. The Pulse is up next. This is Bloomberg.